Keon, a senior research analyst with Thomson Reuters Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, March 21st. We'll start this week's report by taking a quick look at the market activity for the week. Both the S&P 500 index and the Dow Jones Industrial Averages were down for the fund flows trading week. S&P was off about 1.37% and the Dow was down 0.31%. This drove the S&P's year-to-date gain down to 1.4% and actually pushed the Dow into the red for the year. They have a loss of about 0.2% for the year-to-date. Both the indices suffered all the weekly losses on one trading day last week. This was driven by the Facebook controversy with their data privacy breach. In other market news, the Federal Reserve announced that they'd be raising interest rates again, another 25 basis point hike. And they also jawboned the market to let them know to expect another 2 to 3 interest rate hikes this year, followed by 3 more next year. This forecast is based on the Fed's internal projections of faster economic growth, higher inflation, and lower unemployment rates in the near future. Let's turn our attention back now to the fund flows activity for the week. We'll start by taking a look at our macro groups. Equity mutual funds took in $1.5 billion in net new money last week. Taxable bond funds had net inflows of about $2.9 billion. Muni bond funds took in $405 million in net new money, and money market funds saw just over $300 million leave their coffers last week. Let's move on now. We'll take a closer look at each one of the fund asset groups, starting with the equity group. As we said, equity mutual funds had net inflows last week, about $1.5 billion. A familiar story here where the net inflows were dominated. In this case, all the net inflows this week came from non-domestic equity funds. They took in about $2.9 billion for the week. And domestic equity funds saw about $1.4 billion leave. Breaking it down a little bit further, a little bit more granular here, taking a look at the peer groups within the equity categories for non-domestic equities. Global equity income had the highest net inflows, about $800 million on the week. And on the domestic side, equity income funds had the highest net outflows, about $514 million left their coffers. Let's take a look at our equity ETF group now. Net outflows from this group last week, they saw about $11.1 billion leave their coffers. Fairly heavy concentrated, about a handful of products. The largest outflows belonging to the iShares Core S&P 500, the Spider S&P 500, and they had outflows of $6.6 billion and $4.4 billion respectively. And on the flip side, the iShares Russell 2000 took in about $1.5 billion in net new money. Moving on now, we'll take a look at our taxable bond fund group, starting with mutual funds. They had net inflows last week. They took in just over $2.9 billion in net new money. The major contributors here were the Core Bond Fund Group and the Core Plus Bond Fund Group, which had net inflows of $1.1 billion and $560 million respectively. Let's take a look at taxable bond ETFs here. Almost static for the group. They had slight net outflows. They saw about $141 million leave their coffers. On the sell side, on the outflow side, we see the iShares iBox High Yield product with just over $900 million in net outflows, as well as the iShares 20-plus year Treasury ETF saw about $332 million leave, while conversely on the net inflow side was the iShares iBox investment grade product with net inflows of just about $780 million for the week. Moving on now, we'll look at our Muni Bond Fund peer group. Net inflows for this group last week as well, about $405 million in net new money came in. It was the third straight week of net inflows. Major contributors were the Intermediate Muni Debt Bond Fund peer group and the General Muni Debt Bond Fund peer group, which had net inflows of $332 million and $134 million respectively. Our last group to take a look at is money market funds. Slight net outflows from this group last week. As we mentioned previously, just over $300 million aggregate left their coffers. The largest net outflow belonged to the institutional U.S. government money market fund peer group, which saw $2.5 billion leave. And the largest net inflow belonged to the institutional money market fund group, which took in $1.5 billion in net new money last week. Well, that wraps up this week's report. If If you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will be talking about that week's fund flows activity.